This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to explain why the Bee Gees were right. Staying alive is important. Failure of a proposed insurer to stay alive until a life insurance policy was delivered cost his fiancé almost $5 million. On January 27, 2021, Dr. Travis Richardson completed an application for an individual life insurance policy with Pacific Life, seeking $4,816,949 in coverage. Blevins was Dr. Richardson's fiancé and was listed as the primary beneficiary of the policy. Lamar Breshears was the insurance agent for Pacific Life. Champion Agency handled the details. Dr. Richardson died unexpectedly before the policy was delivered and the insurer refused to pay. In Pacific Life versus Katie Blevins, a June 15, 2023 decision of the United States District Court for the Eastern District of Arkansas, the United States District Court resolved the claim of the beneficiary. It did so based on the facts that on February 1, 2021, Champion transmitted Dr. Richardson's application to Pacific Life with the instructions to process the application and to mail the policy to Champion at its office in Albuquerque, New Mexico. Pacific Life received Dr. Richardson's application on February 2, 2021, and on March 11, 2021, Pacific Life's underwriting department approved Dr. Richardson for policy, and the initial monthly payment of $16,668.68 was paid. The same day that the policy was approved, Pacific Life uploaded an electronic copy of the policy to its Plan Performance Tracking Portal, the PPT portal. On March 12, 2021, Dr. Richardson emailed Breshears and asked him when the policy was active. Breshears responded the same day, stating, "Today, if you were to die today, the policy would pay out a death benefit." Breshears was wrong, because Dr. Richardson died unexpectedly 2 days later, on March 14, 2021, before the policy was delivered to him. The physical policy was received by Champion on March 15, 2021, 1 day after Dr. Richardson died. Pacific Life refunded the initial premium payment on March 25, 2021, taking the position that the policy was not in force at the time of Dr. Richardson's death because it had not been delivered as required by the application and the policy. The court analyzing the issue resolved it as follows. It found that it was undisputed that delivery of the policy was a valid condition precedent to Blevins being entitled to receive payment under the policy. The application stated that, quote, coverage will take effect when the policy is delivered and the entire first premium is paid only if at the time each proposed insured is alive and all the answers in this application are still true and complete. The policy, which incorporated the application, stated that a policy is in effect and provides a death benefit on the insured on the date the policy and associated riders become effective. The policy date for the policy was March 11, 2021, a date before Dr. Richardson died. Pacific Life, however, claimed, appropriately, that delivery of the policy required Dr. Richardson to have received and accepted a physical copy of the policy. It is undisputed that this did not happen, and Pacific Life sought summary judgment. The court found that there were no material facts in dispute and agreed that the policy was not delivered. The fact that the challenged terms are not defined does not make them vague or ambiguous. Importantly, The USDC noted that the policy must be read as a whole and effect given to all provisions. Construction that neutralizes any provision of a contract should never be adopted if the contract can be construed to give effect to all provisions. The policy in question unambiguously stated that it is in force, that is, defined as meaning in effect and paying death benefits, subject to your acceptance of the delivered policy and payment of the initial premium. Dr. Richardson was dead and could not accept the delivery of the policy. So while the term policy date clearly was confusing even to the agent, Mr. Breshears, it did not neutralize the delivery and acceptance requirements. In addition to the delivery requirement, the application stated coverage under the policy would take effect when it was delivered only if at that time the proposed insured was alive, and all answers to the application are still true and complete. Under Arkansas law, if the policy was mailed to the agent unconditionally for the sole purpose of delivery to the insured, the mailing of the policy from the insurance company to the agent would constitute constructive delivery. However, the burden of proof to show that the policy was unconditionally delivered to the agent for delivery to the insured is on the plaintiff, and she failed to meet that burden because Mr. Breshears testified that he understood delivery of the policy to mean physically sending the policy to the client, and that 100% of his policies have been delivered by paper. Pacific Life has established, therefore, that it physically mailed the policy to Champion pursuant to the instructions it received with the transmission of Dr. Richardson's application, and included with the mailed policy were a delivery receipt and an amendment to the application to correct minor inaccuracies. Blevins did not establish that there is a genuine issue of material fact on the issue of constructive delivery of the policy, and there was no way for Dr. Richardson to deal with the amendment to the application because he died. Since at the time the outstanding delivery requirements had not been communicated to Breshears or Champion at the time, she argues that those delivery requirements were waived. However, that does not support her claim that the precondition of delivery itself was waived. The court had no doubt that Dr. Richardson, Breshears, and Blevins believed that Dr. Richardson was covered under the policy as of March 11, 2021. However, Pacific Life's motion for summary judgment was granted because their belief was without substance, because had they read the application, they'd have known that there could be no coverage unless the policy was actually put into the hands of a living Dr. Richardson and the application was corrected. In my opinion, people buy life insurance because they recognize that life is a disease from which all humans suffer. We all eventually die. Dr. Richardson, a physician, wanted to protect his fiancé and applied for life insurance that he expected to have for many years, only to die before the policy was delivered to him. Insurance policies must be read as a whole. In this case, the policy never came into effect because Dr. Richardson was not alive when the policy was delivered. It was a sad result, but on its face, a correct decision. This video was adapted from my blog Zalma on Insurance, which is available free to anyone who clicks on the URL zalma.com/blog. It's also available free as a Rumble video or as a video on YouTube. And if you watch the videos, I'd appreciate it if you click on the like button or the thumbs up button on Rumble. And if you want further details on insurance, insurance law, and insurance claims and fraud, please consider subscribing for a very small fee to my locals community or to my Substack publications. Thank you for your attention.